You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some hilarity, some analysis. Throw it all together, stir it up into the tasty, delicious, fizzy brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, and if you're saying to yourself, hey, he sounds a little bit different, well, it's because we're back from our gallivanting into the Southern Mobile Studio. So we're back here in the old Options Insider Studios here in sunny and very hot Chicago. And so, yeah, that should be fun. But of course, it makes things sound so much better, and also allows us to go live. So if you guys were missing the live stream and saying, yeah, you know, my day isn't complete without a little bit of live love from Mark and the Greasy Meatball and Uncle Mike and all the rest of the gang, well, don't worry. We got you covered. We're back live via Mixlr. So if you are able to tune in Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, we'd love to see you. Just grab that Mixlr link. That's MIXLR. Or just grab it via the website or follow us on social media. It's all tweeted out there ahead of the show as well. And of course, if you're listening after the fact, welcome. We love you guys too. We just also like to make sure we let you guys know you can join us live if you are so inclined. We're back from the road and ready to rock. And of course, you can find all the goodness that we put out here. Maybe you missed an episode. You say, hey, what did they talk about last week? I want to go back, check that out again. Well, easiest place to do that, theoptionsinsider.com. Or, of course, if you are so inclined, head on over to iTunes or TuneIn or Stitcher or so on and so forth. Just remember, those places there, those outlets, sometimes they cap how many episodes of a show they'll display. So if you're looking to go back, you know, we have 500-plus episodes here. If you're looking to go back a little bit of a ways, probably just easiest to go back to our website where it's all available. We don't limit anything. You guys can mainline it. It's also all available via our mobile app, which is, of course, out there on iOS and Android and Fire OS and every other platform under the sun. And hey, while you're listening, while you're streaming, maybe even while you're streaming live, we'd love to hear from you guys. Send in your questions, your comments, your insights, your pearls of wisdom. We love to hear from you guys. And joining me on the old program today, let's start in order of proximity. Oh, I can't really do that because I don't know where the heck he is. So let's just start where I know the guy, at least I know where he is. That is Uncle Mike Tussaw, beaming in from that sleepy little provincial hamlet known as St. Charles, Illinois. He never leaves because, quite frankly, why should he? He lives in paradise on earth. Uncle Mike, welcome back to the program, sir.
There's no reason to ever leave. That's what I say.
Paradise on earth. That's right. A new one. That's a new one.
The sleepy little hamlet.
I had not heard St. Charles described that way. It's good to know.
It's in the brochure, which is on my desk, because in case anyone wants to come see it, the travel brochure for lovely Paradise on Earth, a.k.a. St. Charles, Illinois. Uncle Mike's itching to do a live show from out there. Maybe we will, from a boat or some other waterborne craft out there in St. Charles one of these days. Might be kind of fun. And if you recognize that tinny voice, listeners, we are also joined by the greasiest of meatballs himself, Mr. Mark Sebastian, from OptionPit.com, as well as, of course, Carmen Lion, Capital Uncle. Actually, not Uncle. No Uncle Meatball here, just Greasy Meatball. Mr. Meatball, welcome back to the program. Where are you beaming in from today, sir?
Well, I'll tell you when I get my Where in the World is the Meatball music. that I love, that I want to hear so much. I'm actually from home right now. I'm getting ready. I'm going to the Saved by the Bell pop-up restaurant later today, so I'm getting ready for that. And I'm also getting ready for our live show that's coming up in about 2 weeks from today, actually, here in beautiful Chicago, Illinois, from the CBOE. Have you ever done a live podcast from the CBOE itself, Mark?
We've recorded shows there. I don't know if we've ever. We have. So we have recorded some shows there. Yes, I should take that back. We haven't streamed them. I don't know if we'll be able to stream them there because I don't know what kind of connectivity they have. But we can definitely record live to tape, and so we have done that before in the big members lounge. It's fun.
You'd think they would have connectivity, but who knows?
I've learned not to bank on any of that kind of stuff. You promise that stuff,
No.
Then you get there, and the Wi-Fi is like dial-up from 1996, and you can't do a damn thing. So I've learned not to promise that stuff because it ends up disappointing everyone. But for the rest of you out there who are so inclined, you can join us in a couple of weeks check it out if you want. The easiest place to go, optionpit.com, and then click on the link to learn more about the extravaganza, spectacular, call it what you will, that's going on over there at the SIBO in a couple of weeks. We'll be there, so it should be fun. Meanwhile, it's time for us to get rolling with ye old programs and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was going on in the world of options and indeed in the broad market today. And we're looking here at the end of the day, things pretty much going out with a bit of a whimper. Most of the major markets unched, slightly down, slightly up for the most part. SP off about, fractionally on the day. Dow as well. Q is a little bit up, about a third of a percentage point or so. And the VIX cash ticking up a wee bit at the end of the day as well. And that pretty much kind of tells the lion's share of the story. Not a heck of a lot going on. We had a little bit of a range in the S&P today, about decent range, about 20 handles. So that's not bad overall, given what we've seen of late. That's not that impressive, but it certainly isn't exactly starting unched and closing unched. So there was a little bit more action going on there intraday than was led to be believed. At the end of the day, yeah, kind of going out with a bit of a whimper. Not a heck of a lot, lighten it up. VIX cash holding steady right in the mid-teens there, right about the 15 handle. We do still have some stuff coming up later on this week that may jog it loose, but we'll get to that in a little bit. Before we do that, let's start off in the realm. Let's start off in that sleepy hamlet, a.k.a. Paradise on Earth, St. Charles. Uncle Mike, what caught your eye in today's activity, sir?
There was a lot of volatility throughout the day, but like you said, it kind of went in with a bang, but out with a whimper. The one thing that really caught my eye the most would be oil. Crude oil down almost 5% on the day. What's interesting about it, though, is in looking at this, we're not XLE is down today, but I would expect if we had a 5% down day in crude that we would have a little bit more of a downturn in the energy sector. So that's one thing. The talker, a lot of people seem to be, just from the people that I talk to, there seems to be some interest in the retail world of getting in on oil right now for the short term. So take it for what it's worth. That could be a contrarian indicator to mean that we might be in for some a little bit more of a downturn in oil. But that's one thing that I'm seeing today. From a technical standpoint with crude, what's interesting about it is the fact that we don't really have, let's bring up a chart here, there really doesn't appear to be any more levels. You could make an argument for 44 as a level of support, but there's really, I wouldn't say that that's too strong of I would say that if we did break 44, we could be in for a little bit of a short-term downturn, but I do stand by my position in terms of being long-term bullish on XLE. I'd still recommend not letting this downturn concern you in the near term. But big story of the day from what I see is oil slipping.
You're getting punny in your old age there, sir. Have you done any adjustments to your XLE trades? I know you were looking at some puts out there and a few other trades. Have you done any rolling or any changes to your XLE since the last time we talked about it?
I know I'm going to get chastised for saying such a thing on this show, but I'm just holding on to XLE.
That's super exciting, sir. Thank you for that.
For that
This
one.
is not the underlying show. I'm going to mute you now in shame as we turn instead to the other channel. Maybe we'll get a little bit of options talk out of him. He is the Greasy Meatball. Mr. Greasy Meatball, what caught your eye in today's activity? Had a decent range, kind of ended with a bit of a whimper. VIX cash kind of after surging and moving and crushing and then crashing over the past couple of weeks, now kind of holding steady right in that mid-teen range, just about the 15 handle or so. So amidst all of that, what caught your eye in today's activity, sir?
Well, the title of our blog today is something that I kind of mentioned from earlier on. It's we're calling it the pound. The pound is the new oil, because movement in the pound really drove movement in oil, or movement in the markets, just like oil was earlier in the year. The pound opened up today pretty nicely against the dollar. It sold off. The market sold off. So we've got a little bit of correlation building between trading in the British pound relative to the dollar and trading in the S&P 500. That's kind of the interesting piece. I think vol is too high in VIX right now, but realized vol, other than today, has kind of made up for it, and so the VIX is going to stay around 16.
Yeah, we after the huge rally we saw out there in VIX land, and then the VIX apocalypse implosion, call it what you will, that followed shortly thereafter. And now we're kind of holding steady a little bit right now. Not surprising, because we do have a wee bit of a number tomorrow that may perhaps inject some juice into the marketplace. A lot of people also post-Brexit kind of wondering what the heck is going on. Are we going to cut rates? Are we going to raise rates? What does it mean for our economy? What is Britain actually going to do? How are they going to leave? When will it happen? Et cetera, et cetera. So still a lot of unknowns out there, and a lot of other shoes waiting to drop. So we'll keep an eye on those. Speaking of which, this is our first show first show of July, really, because of course we were off at the beginning of the week here for the big holiday in the U.S., July 4th. So this is our first chance to really dive into the numbers for the month that was, of course, the big monthly volume breakdown for June. And June, not surprising, given a little bit of help from Miss Yellen and, of course, more help from our friends across the pond. June was a pretty decent month for options volume, according to our friends over there at the OCC. The Options Clearing Corp, their volume was up 11% in June from a year ago, so up from June 2015. They hit about nearly 380 million contracts. That's up from 340 million back in June of last year. That's the second highest volume level for June in history. I'll have to dig in a little bit to see what the first highest was, but I probably have some guesses there. So that's a pretty strong month overall year to date. Total volume for the OCC up about 5% from last year. This point last year, about 16.8 million contracts. To break that down a little bit more granularity. Of course, exchange listed options. That's what we're looking at. OCC clears a lot of other stuff too. That reached about 367 million contracts. That's up 10%. From June of last year. Year-to-date volume for exchange-listed options up about 4% overall. Equity options volume, break it down a little bit more. 8% increase up from June of last year. ETFs were rocking quite a bit this past month with cleared ETF options volume is up about 30% from June of last year. So they cleared about 165 million contracts. So that's up from about 127 million last year. So ETFs rocking and rolling. And of course, index options up 26% in June. So it depends where you looked, how strong of a month it was, but it was pretty spectacular across the board there with June just knocking it out of the park. Uncle Mike, greasiest of greasy meatballs. I'm guessing that doesn't come as a surprise to either of you. A few things happened to drive some volume last month.
Yeah, just
I'm just
crazy.
shocked that there was so much volume after the Brexit, huh?
Well, I'm surprised because, the word was there was lots and lots of cash on the sidelines. And, the alternative to going to cash is to go to options. And smart traders were using options to hedge themselves and potentially made money off Brexit twice if they were smart and unwinding their hedge and smart about hanging on to that stock. They would be potentially great shape. I'll tell you what worked this last month was owning straddles if you hedge your gamma.
Yeah, unfortunately for so many of our listeners out there on the retail side of the fence, that's a difficult road to hoe. I mean, we've talked about that many times on the show in the past, the challenges of retail, of being able to, or perhaps not really being able to hedge their gamma. They don't have the capital in their account or the wherewithal or the understanding of how to do it, or it takes a lot to really be able, and also the margin rates and everything else that you need to really hedge and scalp gamma effectively. That's what he's talking about, of course, listeners, scalping. Just going out and buying straddles without that component to it. That way lies ruin, as we've said before in the past. Speaking of Brexit, excuse me, easy for me to say. We update on we asked people last week, at the end of last week, so didn't have a chance to talk about it on the show. Which product out there surprised them the most in terms of their performance post-Brexit? We gave them 4 choices. We gave them volatility. Could be anything across the board, VIX or whatever else. Pick their poison, BXX, whatever. Rates, so it could be the 10-year or euro dollar or whatever the case may be. Equity indexes, so of course your SPYs, your Russells, etc. And then we had FX in there. That could be, again, anything. It could be pound dollar, it could be euro, US dollar. I'll give you guys a chance to guess. So what do you think? What product surprised you the most? The performance, I should say, post-Brexit. And then which one do you think won the poll? Uncle Mike, we'll start with you.
I'll go with the pound euro, and both answers.
Both answers. So you think FX won the poll? Mark, where do you fall, sir?
What were my options again?
Vol, rates, equity indices, or FX?
Actually, check it. I'm gonna change mine.
I'm gonna say rates. Hey,
rates too.
I
said
well,
right before he said.
I'm changing mine to pound dollar. Yeah, to pound euro. I'll take yours, Mike. Take that.
All right. Good. We just made a trade. We're filled. Ha!
There you go.
Well, you guys both may want to DK that trade because neither of you win. The winner, surprise, surprise, was equity indices. That with 52% of the vote, the course of the market's dramatic sell-off and then equally dramatic rally post-Brexit. Surprising quite a few people. Of course, the event itself also surprising quite a few people. Number 2, very close, was volatility with 43%. So I'm surprised you didn't pick that way, Mr. Greasy Meatball. And then rates had effectively marginal votes, effectively 0 votes, and about 5% for FX. So yeah, not a lot of love for rates and FX. Our audience these days seems like they're all about VIX and volatility and equity indexes. And so luckily we got that for you to discuss. And I think with that, we'll keep on rolling. We got some activity to talk about. Maybe we should move that into the odd block as well. So I think we'll do that. And without further ado, we'll dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down what's moving, what's shaking, what's rocking, what's rolling out there in the weirder side of the business, some of the shadier side, like I like to say, the dark alleys of the options market. Before we get to some of the stuff that we highlighted on the site today, Mark, a lot of people were asking us what we thought about this stuff going on in Valiant. I think the Journal and a few others have written on, Valiant. If you've been paying attention to the markets over the last few months, you know that Valiant has kind of been a fun story. I guess it depends, fun in quotes, depending on which side of that trade you're on. It has seen some activity of late, shall we say. It's down about a third since May. They brought a new CEO on board, and it's been kind of all sorts of volatility as a result. We did see coming in earlier this week on Thursday, actually this morning, that we did see huge gap up in some very, very near-term options out there in Valiant. Valiant, of course, ticker symbol VRX, trading today about 23.50, 23.5 went out at the end of the day. And we saw someone coming in, picking up calls that expire tomorrow. So these are effectively dailies. They expire on the July 8th. The 25 calls gobbling up a ton of those to the point of, about 5,000 going up today, 1,500 of those to open. It looks like opening, at least coming in on the heels of this trade. They traded for a penny and then all the way as high as 33 cents. They went out about 6 cents at 8 cents again, but they got another day to go. They were making a big deal about these opening, but it looks like there's about 5,300 or so open on this strike. So if they're buying them back for a penny, these could be aggressive short closing here as well. I don't know. I haven't had a chance to dig into this too much. A lot of people are asking us, though, what's been going on. Of course, they also had some action on the 24s. It's about 7,000 of those going up. That is opening paper, as well as about 3,000 of the 24 halves. So even if the 25s are closing, it looks like opening on the 24s and 25s. I don't know, Mark, I know you've been watching from a distance the kind of whole Valiant drama with the CEO and everything else that's been going on out there, and kind of the Sturm and Drang that has resulted out there. These calls make it on your radar, and what's your take on Valiant these days as a name and some of the vol we're seeing out there and the activity they're in?
I mean, this thing has become such an albatross and so hated that, they can't even sell their good drugs. They've got all sorts of problems, and maybe things got bad enough that they're able to fix things, but I'm not sure I'd be a huge bull in Valiant. I think it's more likely to see single digits than to get back to triple digits. Well, that's an easy one, but to get back, I think it might see single digits before it sees 30 again.
So you're not piling in with everybody else, apparently, on the 24s and 24 halves, and apparently, perhaps, the 25s as well, buying those for a penny.
Well, buying those for a penny, that's a waste of a penny, most likely, would be my bet.
Throwing away a good penny. Like I said, about 23 halves, so things got to move, depending on what strike you're looking at, least a half a buck, if not $1.50, for tomorrow for these calls to start making some money. If you paid 33 cents for those 25s, then you need a nice run for tomorrow for those bad boys to make some money for you. Again, that gets into the lottery ticket side of the fence. Let's move on, though, to some of the activity we were profiling today on the site. Easy for me to say again. Let's start off in... we haven't talked shiny stuff in a while here on the show, so let's get into that with a gold company. This is a newcomer, I think, to the odd block. This is Kinross Gold Corporation. Ticker symbol KGC. Closing today, $5.39, off about 35 cents on the day, or about 6%. So this is also our gold name as well as our resident cheapie on the day. This is the name that does about 11,000 contracts a day, doing just a tick under 40,000 today, so nearly 4x their ADV. 31.2 to 1 calls over puts. That, listeners, should give you some idea of what we saw going on out here. In particular, our attention was drawn out to AUG. The AUG 5 strike really attracted our attention. We started off seeing about, just a small amount. We saw about customer coming in and selling 23,300 of these AUG 5 calls and doing it for 76 cents. That's on open interest of nearly 42,000 contracts. So there's some size open on this contract. Looks like this is a closing trade and probably closing for a fair amount of money. Looks like back in a little while ago, actually, back in May, the end of May 31st to be precise, we saw a customer coming in and scooping up these bad boys for about 30 cents. So he's more than doubled his money at this point, and probably a pretty happy camper. It's worth noting he's only selling out a little bit more than half of the position, if this is indeed all him. If it's not, then maybe a little bit more, like 2/3. Either way, there's still probably some contracts to go, so be on the lookout for another anywhere from 10 to 20,000 of these calls coming out over the coming days. If he's smart, he wants to get out on some of these bad boys. Or maybe he wants to ride them for a bit. He's clearly made his money back and then some. So perhaps he's looking for another run. Given the looking back at a recent chart here of good old KGC, and it has been on a decent clip, certainly since the beginning of the year when it was trading, about $1.50. So not a bad run for KGC. And when he piled in towards the end of May, this thing was trading for about $4.25, $4.30 or so. So the thing has rallied about $1 since then. It's had a few peaks and troughs along the way, but sitting at decent highs for the near term. And certainly if you go all the way back to January, this thing has printed some money of late. So interesting stuff. Mark, a lot to parse here. First, this guy having some well-timed purchases and making some money, but also not closing the whole thing out. You think he's going to ride for a while, or you think he's going to just close them out maybe the rest tomorrow?
He sold enough to pay for his initial purchase. Good set of trades, took a bunch of money off the table, and then is now, I guess, taking a run at gold continuing higher. My guess is if KGC is down anymore tomorrow, you'll see another 14,000 of these print, as this guy probably doesn't want to give away all the money he just made.
Yeah, if he's a savvy guy, and it certainly seems like he's at the very least well-timed, if not savvy, then he probably will dump the rest of them forthwith in a little while here. Just tweeting along for our live audience so they too can follow along with. By the way, if you are listening live, you got some questions, some comments, fire away. You can do it via the Mixlr app, of course, if you're in the chat room and have a Mixlr account. If not, hit us up by the usual social media outlets, and we'll try to work you guys into the show here. Let's move on to our next name. This name, maybe a few more of you have heard of, and maybe have occasionally even traded. This General Electric, ticker symbol GE, closing today $31.82, effectively unched on the day, only up about nearly a dime or so. As you might imagine, this name does some paper, averaging about 73,000 contracts a day, doing it 208,000 today, so some size, to put it mildly. In particular, it was, actually, before we get to that, about 4-to-1 calls over puts. That should give you some inkling, some hint of where our attention was drawn. And if you want to find the actual activity, you got to go all the way out to the October expiration cycle. In particular, it was the OCC 33s that drew our attention. And to call this size is size. This is not maybe VIX 1x2 rolling 1 million contract size, but this is pretty decent size. We had a customer coming in and just gobbling up all of the OCC 33s to the tune of one block was 88,000, and he put up another, looks like almost 20,000 to the tune of about 105,000 going up total on the day. So serious size here. He gobbled up, looks like the lion's share of these bad boys at about 54 cents. Doing it tied to stock, it's worth noting. This is on open interest of just 30,000 contracts. So clearly, this guy is opening, and he's doing it for some size. Typically, when you're scooping, well, there's a lot of reasons why you might scoop calls tied to stock. We'll get into that maybe in the mail block in a little bit. I think we have a question along those lines. But it could be if he thinks vol is a decent buy. There's a lot of reasons. Again, we might do that. You might want the old synthetic puts. A lot of reasons you could do that. But either way, this is a pretty interesting trade. I don't have the exact print of how many shares he did. So if he did it neutral, if he did it 1-to-1. But either way, this is an impressive size trade. Looking back over the past year or so for GE, the outlier of August 24th notwithstanding, this thing has had a decent range all the way down to about 25 or so on the downside, and then gapping up to about where we are right now, right about the 31, 32 level over here. So our friend here liking himself some GE, liking himself some vol in GE in particular, and we'll see how this bad boy plays out. Mark, what's your thoughts on this? This one, I think, first came to your attention over there on the size. The fact that he's doing it tied. Did you have a chance to look at the ratio? Did you do it 1-to-1 or delta neutral? And what are your thoughts on our friend's play here in GE?
It was a delta neutral play, not one up. The guy is clearly leaning on GE going up, not down. These calls are around a 30 delta. So he does a lot better if GE runs higher than runs lower. So he's looking for a move. And really, if you look at the vol, 16% earnings next week, these aren't that expensive. So I think this was a vol play and a value play with GE, him looking for GE to rally.
Certainly a value play. He's looking to score some value and do it for size. Let us know what you think about this play out there in GE. Do you like GE's upside? Do you like doing it this way with calls and with calls tied to stock? Let us know your thoughts on this one as we move on into our final name here on the day, at least for the odd block perspective. Moving on, this is, I believe, actually, I think we talked about them maybe once or twice in the past, but it has been some time. This is Interval Leisure Group, Inc., ticker symbol IILG. If you're not familiar with these guys, they're a provider of non-traditional lodging, so they do a lot of timeshares, I know, and things like that. Closing today, about 16.5 on the day, $16.50 roughly, pretty much unched on the day. So it wasn't underlying activity that caught our eye so much as the options activity lying therein. This name does about 5,500 contracts a day, doing nearly 20,000, so nearly 4x today. Lighten it up, 302-1 puts over calls. That should give you some inkling of where our attention was drawn out here in good old IILG, and in particular, our friend went a little bit farther out for these bad boys, all the way out, not just to October, not just to Dece, but all the way out to Jan of 2017 to blast away on some size puts. And his strike du jour was the Jan 16 puts coming in and just hitting those bad boys for $1.05 over and over and over again, doing it in multiple chunks throughout the day, totaling about 18, nearly 19,000 on the day. They went out $1 at $1.05, so that was a pretty decent sale on his part. Opening trade, only 559 contracts open on this strike. So this is someone who's very clearly drawing a sizable line in the sand here for IILG, saying, you know what, if this thing drops below the 16 handle, and he sold it for $1.05, so effectively $14.95, then he's happy scooping himself up some IILG at that level. Looking back at the year that was for Interval, that's actually a fairly aggressive level. This thing, as recently as February, was trading as low as 1076, and even back in May, so even back a few months ago, it was trading back 1175. So this thing has flirted with substantially lower levels than the 15 handle, roughly. So interesting to see our friend here putting such a sizable line in the sand here. This appears to be a cash secured put, so we all know there's no free money, listeners. Our friend here is putting aside a sizable amount of money, probably, to cover this stock sale, if it does indeed, or stock purchase, if it does indeed come to pass. So he's sitting on a lot of cash for through January, just for this trade to come in. Let us know what you think on that. Would you set aside that much to collect $1 on a $16 stock, roughly? So a 16th for between now and January. Does that attract you, or do you have perhaps other plays in mind? Interesting stuff. We'll see how this comes to play. We're going to mark this in the to be watched category, along with a few others from today. Mr. Greasy Meatball, take us home. What are your thoughts here on this pretty sizable line in the sand here in Interval Leisure Group?
Yeah, he's going for pulling in, an 8% yield? That's not terrible. Or he's going to try and take delivery for $14.85. I mean, this could be a guy trying to get into the stock. But either way, what is that? 6 months from now, it's not a terrible yield in this name. So, it could be that, or, again, could be just somebody trying to put on a position.
Yeah, I mean, that certainly could be the case. And I think it's not a bad level. You're right, a 16th. Maybe we could hem or haw a little bit. We'd like to see, Usually we like to see our lines in the sand drawn a little bit closer to the front month and then rolled if necessary. Usually that tends to work out better over time. Again, when you're managing size money, that isn't always available to you. You want to kind of just draw your line in the sand here and then move on to the next trade. I could certainly see that, but again, you're probably not maximizing your premium harvesting if that is indeed your goal. Either way, let us know what you guys think, because it's time to put a bow on the odd block and open it up to you folks out there, because it's Thursday. That means it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block. This is your chance. Every week we open it up to you guys, the listeners out there. A lot of people floating around in the chat room. If you don't want to just lurk, if you want to ask your question live, now is your chance. Get them in via Mixlr or StockTwits or Twitter or however you like. Email might be kind of hard because we're not really monitoring that during the show, but we'll pull some of those that we've already gotten, as with so many of you also like to write in after the fact. So we don't want to ignore you guys as well, but if some of you live folks want to chime in, now's your chance. Meanwhile, we're going to get right into it. First up, this one comes from RazMichaghian. I guess he thinks we're TOS tech support or something. He wants to know, he would like some info on how he can set up his stock scan on TOS for pre-meters. Thank you. I don't know what the heck he's talking about. We are not Thinkorswim tech support. I appreciate you listening, but I don't know how to help you configure that on your TOS platform, nor would I spend showtime on that. I encourage you to hit up our friends over there at Thinkorswim if you are so inclined and want to know how their platform works, because they know it far better than we do. Let's move on to another one here. This is actually a timely one. I referred to it earlier here in the show. This comes from JViz. He or she writes, why do people trade options with stock? Why do they buy calls and then sell stock in the same trade? That goes back to what we were talking about earlier. What advantage does that offer? The tide trade. We were just talking about it today. It's a frequent topic in our odd block. We do see a lot of size option blocks done with stock. They typically come in two different flavors. Like I was discussing with Mark earlier, they could do it effectively what is known as delta neutral. Obviously, options have a delta. If you buy a 10,000 of X numbered X delta option, you have to turn around and sell the appropriate amount of stock to hedge that out. You are now effectively delta neutral, which means you don't care about the direction of the underlying, which is usually when you see that, that's usually a volatility play, which is what we were talking about earlier. In the odd block, someone is using those options and trying to hedge away the underlying component to really focus on the volatility component. That's what we used to do as market makers all the time. Very rarely would you want to take a directional, aka a delta bias. So that's one way we see a lot of tide trades go up, and that's effectively to spec on volatility. We also see them going up 1-to-1 sometimes too, which is the effective number of shares to offset or to go with the number of contracts of options you're actually trading. In that case, remember we've talked about synthetics before on the show, so if you're doing calls with stock, you're actually looking at a put in that case. That kind of changes the conversation a little bit. That's kind of a savvy way to put on a long put position in the case of the scenario you're referring to. We also see some other more kind of just common use cases for people coming in. We joked, I think a few months back on the show, I think it was Men's Warehouse, someone coming in and dumping a ton of stock and then also buying some upside calls. And we were obviously focusing on the upside call portion. That seemed kind of silly, but really that person was clearly shorting a bunch of stock and then using the kind of out-of-the-money calls that they were gobbling up as a bit of an upside, hedge upside protection in case of a worst-case scenario. And that trade, of course, printed a few $1 million for them because the stock went in the toilet. So that's also a frequent case, particularly for the scenario you're talking about. Someone really wants to just short the stock, and they put on some calls on the upside as a kicker, and not as a kicker, but as a hedge, just in case the worst does come to pass. And if that happens, they got those calls in their back pocket to help protect them in a worst-case scenario. Mark, we were just talking about tide options in particular, this exact scenario of buying calls and selling stock. Anything you'd like to add here for our friend Mr. and Mrs. JViz? Why do you like to do options tied to stock?
Well, just because something delta neutral doesn't mean you're going to have a directional opinion. I can set up something delta neutral so that at onset I don't have, I don't prefer one way or the other. But, like those GE out of the money calls, even though it was traded delta neutral, that guy clearly wants the underlying to rally, not go down. What it really allows them to do is hone in on the volatility of the trade rather than just on the directional opinion. So what this guy is actually telling you is it is cheap to acquire deltas in GE and upside volatility is oversold. So I want to get those calls as cheap as possible because the volatility is too low. But if GE drops over the next couple of days or, hits some technical bounce or the market sells off, I want to be right on volatility regardless. And then the bonus is if my directional opinion is right. That's really what those delta neutral trades mean a lot of the times.
Yeah, you can never obviously get rid of all your directional component, even if you hedge it away delta neutral. We talk about gamma all the time here on the show. Once the underlying starts moving, that gamma is going to kick in, and you're going to get some deltas in one direction or the other. And that gets back to what we were talking about before, gamma scalping, or in the case of the GE, if it's a big move, he's actually it's going to work out for him. It's more of just the near-term, immediate deltas that you're wiping away. Mike, I know you probably don't do a lot of delta neutral plays on this, but any thoughts on, in general? I mean, has anyone ever come to you and say, hey, Uncle Mike, I want to do this tied to stock, or is this kind of just not a scenario you guys utilize a lot over there in the realm of RCM?
Not too frequently. I mean, just a little bit about it. If you see something that, although it may appear to be somewhat delta neutral for the time being, it might not be going forward. What makes me think about is how I was hedging Apple right before earnings a couple years ago, which I talked about on the show. If there is something there that can benefit being somewhat delta neutral for the time being, that can be.
I guess the third time is not the charm. We'll get him back shortly. There does seem to be some weird, in Paradise on Earth, there does seem to be some weird issue. This is the joy of live radio listeners. Let's move on to another question here. This one comes from AJones. He's kind of referring or maybe building upon a conversation we had last week on the show. He writes, or perhaps she, hey, shame about mini options. A great breakdown of the failings that doom that product. Well, thank you, Mr. and Mrs. AJones. It was very much a doomed product, even though it didn't seem like that at the start. He or she goes on to write, are there any other products out there that surprised you, either with their success or with their failure? Well, I said before, I think I said the minis, and the failure of the minis was certainly my greatest surprise for a failure. I thought that product had everyone behind it, the entire industry, clearing firms, exchanges, brokers, traders. Everyone was gung-ho to have a small Apple contract. It seemed like it was going to solve all the problems of the business, and then lo and behold, everyone used it to kind of as some sort of cash grab, and that killed the entire thing. And also, market makers didn't want to touch it for whatever reason, and so for probably a lot of the reasons we discussed on the show in the past. So that combo, that 1-2 punch really seemed to kill it. So that's certainly my surprise on the downside. If I had to pick a biggest surprise success, well, I think there's one far and away winner for that, and it has to be VIX. When they first told me, I remember sitting down with Bill Brodsky back in, it must have been like 2004, when he was still CEO of the SIBO, and they were telling me their plans to launch these VIX futures and then the VIX options. Options Insider didn't exist at the time. I was still trading and kind of just doing my fun column on the side for Traders Mag, and I was doing this for Traders Magazine, and they were explaining what they wanted to do with VIX, and I couldn't help but just chuckle because I was not that far out removed from the SPX pits and what they were describing. Obviously what it is. It's effectively a derivative of a derivative, a product that is based around the implied volatility of the SPX options, which are already a very much institutional product. That a volatility product based on that is going to be the most institutional product in the history of time. No one's going to touch it except for these big banks that want to dump off all of their volatility risks. So whatever poor fool became the market maker for it was going to be providing a volatility layoff for all of the SPX pits. So what poor fool would ever want to make markets in that? And certainly that was a problem in the beginning. No one wanted to touch it until a few groups figured out how to actually do it. And here we are a decade or so later, and VIX is kind of the biggest success story in the business, certainly over the last decade. Maybe you can argue, for weeklies or some other things. But so the surprise success of VIX in particular with retail. I mean, mom and pop in Iowa are trading this thing. That to me still surprises me to this day. So that's certainly perhaps my two greatest surprises, failure and success. Uncle Mike, if you're back, do you have a surprise failure or success?
What comes to mind to me is single stock futures. I think that's one to where if they would have made it to where they didn't have such a high maintenance requirement on them, I think it could have been a success. And I'm surprised that they never did anything on that. Like maybe set something up to where if you had some type of hedge in place, you could do something more with it. So that one kind of surprised me that it didn't. It seemed like no one was willing to change the maintenance requirements on it. I always said about the single stock futures, they were a great solution from where there was no problem. But if they would have had a lesser maintenance requirement, I think they could have been huge, quite frankly. So that one I was a little bit surprised that failed. In terms of the surprise success, I'd agree with you with VIX, because I just remember kind of poking fun at it on seminars. I just remember saying, only in America, folks, can you trade volatility on volatility. And everyone laughed. And, well, now the CBOE is laughing at me for saying such a thing.
A good pick on single stock futures. That's another good one out there. I remember when they were coming around to the floor of the CBOE trying to hawk us on those on the market makers with the folks over there at One Chicago, which still is going, by the way. One Chicago still a vibrant entity, so they may take some umbrage at the notion of us describing them as a failure, but let's say certainly haven't resonated to the degree that anyone really hoped for them. There were a couple of main selling points of that product. One of them was, of course, being able to short sell on an uptick, or not waiting for an uptick. That, of course, that benefit has been obviated by developments in the marketplace. So that isn't really a selling point. It used to be. That kind of hurt it. I think also, obviously, as you mentioned, some of the margin issues with that. I mean, the whole deal of equity margin versus futures margin was going to be a much more attractive thing, and that never really materialized the way they thought. I mean, they had this grand visions of every market maker and trader under the sun, and hopefully a lot of retail as well, hedging all of their options with single stock futures instead of stock. And it made a lot of sense. But yeah, you're right, for a variety of reasons. Never materialized. Mr. Greasy Meatball, aside from your failure to use napkins to wipe up all that grease, what are some of your biggest surprise failures and or successes?
I mean, I think the failure of all the rest of the VIX complex, from VXST to JViz to RVX to you name it, has been, I think, surprising, especially gold and VXST. I think you and I both thought those would be a success. VXST in particular, we thought people would be all over that, and they failed miserably. Meanwhile, VIX weekly options are doing great. Surprise success, calendar spread options. I never got it. I never understood it. These are trading on the CME, so this is maybe more of a TWIFO answer than an option block answer. But when the CME people were describing the need for the use of calendar spread options, it sounded silly and abstract. But a lot of people trade them, and the volume is surprisingly big in those.
Yeah, good answers all around. Yeah, I can also second the calendar spread. We did a whole show, not just on TWIFO, but on the long and short of futures options. The episode we do with CME, where they described in great detail what they were doing with these calendar spread options, and I kept pointing out to them the myriad things that seemed counterintuitive about the product to me and how they were setting them up. And you'd think a calendar spread option would be, of course, set up to be probably long the calendar spread, but actually it's kind of the opposite because of the way the producers use it. There are a lot of things that were counterintuitive to the product, but clearly it wasn't aimed at us, Mark. It was aimed at a different audience, because it is resonating quite a bit. And you're right, VXST, we lamented that one for a long time. I think we were Volatility Views was the only program on the planet that even mentioned that ticker, and that thing died a slow, painful death, and then lo and behold, they tweak it. They come out with the VIX weekly options, which is kind of what everyone really wanted anyway. And lo and behold, those things are just lighting it up. So there you go. Send us your thoughts on your greatest surprise. We just put out a pretty good list there. I like that list. Maybe we'll write that up as an article or something. The top 5 failures of the options market. That's good clickbait, isn't it? In the meantime, though, let's keep on rolling. Close out the mail block for this week and keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Easy for me to remember. I've only done this show about 500 or so times. This is, of course, the portion of the program where we break down what the heck is cooking for the rest of the week into the weekend. Bit of a truncated week we are concluding here on the old show, of course, with the holiday weekend. So we don't have the same issues as last week where we were looking at a long holiday week, seeing vol coming off as a result. In fact, we do have a number coming out from our friends over there at the Labor Department tomorrow. And that, of course, does tend to inject a little bit of juice into ye old marketplace. And that'll certainly make our prognostications for vol views in the crystal ball a little bit more exciting tomorrow to see how they play out. That said, Mr. Greasy Meatball, talk a little bit about, of course, tomorrow's number and anything else that is catching your eye as we go into the weekend.
Well, now that this Brexit stuff is over and really the pain has not been that bad, the question is, does the Fed raise rate? Does the Fed start teasing raising rates again? Now, you would think with the crazy move in the pound relative to the dollar that they would hold back for a little bit, but if we get a really strong number, does that put a July or September rate hike back on the table? And do markets react and sell off to a number like that? So the number is supposed to be, 172? And if it comes in big, look out, my guess. And then if it comes in too small, the miss is big again. Is the Fed done? Are they out of their bullets? Are they... they can't QE anymore. What do they do? So I think tomorrow's number is a big deal. I also am looking toward next week to see whether we get some euro, that pound starts moving, whether it finds a floor. If you look at where the pound is, it's a steal, probably way oversold, but the momentum is lower regardless of how it's traded, of kind of the long-term value. So what happens? That's I think the big question.
Yeah, even if you're not trading FX, maybe a good time to book your London vacation for the foreseeable future. Because you're right, that pound has been that cheap. I forget if it's 16 years or 30 or 31 years, but it's somewhere along that time frame. Certainly been a long time since we've seen those levels out there for the old sterling. And of course, before we wrap up, Uncle Mike. Walk us a little bit. Actually, before getting to your point there really quickly about the Fed, we do have a strong number tomorrow. we go from threatening to raise and then not doing it to, in the week thereafter, actually pricing in some legit probability of a rate cut coming in the SEP to D's time frame, to now potentially perhaps talking about an increase again if the number is strong. Just how schizophrenic is the Fed these days? That's a rhetorical question. You don't have to answer. Instead, I will turn it over to Uncle Mike. What is catching your eye for the rest of this week into the weekend, Uncle Mike, sir?
Well, of course, the big number that's coming out tomorrow, the fact that we actually had a flat day today, I think that should say something, and that there might be a lot of money on the sidelines, just kind of waiting around for things. And not only that, but also we got the political conventions coming up. Running mates are going to be announced. Not sure if that's going to be a huge deal in the marketplace, but it always can be. So keep an eye on that as well.
There you go, listeners. That's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. And that music means it's time for us to bring this fun, movable feast to a close here. But one last time before we go, we check back in with my cohorts, my partners in crime, my collective nemesis here on the old All-Star panel. See what's cooking with them that may interest you. Let's start in the realm of all things paradise on earth, at least until the Skype gods kick him off permanently. Uncle Mike, what's cooking in the land of RCM?
Hey, call me, folks. We got a lot going on in this marketplace. What can you do in this market? If you're interested in an option-type personality working with you and your finances, give me a call, 312-212-3531, or shoot me an email at mtusaw@rcmfs.com.
There you go, folks. Give him a call, and while you're at it, check out his book over there on Amazon, Go Long with Uncle Mike Tusaw. I think you'll find it pretty fun. Just search for it on Amazon. TOSAW. About the price of a cup of coffee in the morning, so forego your cup of Morning Joe and instead go long with Uncle Mike. I think you will like it, and he will, of course, thank you. And before we go, Mr. Greasy Meatball, give us the rundown on your epic spectacular coming here in July. Or perhaps don't. I think the Skype gods aren't smiling on him, Uncle Mike. Hasn't been the best Skype day. Hey, what the heck? You know, we're when we come back from traveling on the road for a few weeks, some things are going to break. And apparently, good old Greasy Meatballs and Uncle Mike's connections are both of those. We'll look into that for the shows next week. So check it out. We'll put the link in our show notes and on our website as well. We'll also tweet it out. So if you are going to be in Chicago in the next couple of weeks and you want to spend a few days learning about options, talking to some great educators, checking out our show live, and getting a tour of the SIBO, a bunch of other fun stuff, then surf on over there. Click on the link in our show notes. You can register for that directly as well. There's a bunch of different tiers of things you can get. You can get the full day, 3 days, I believe it is. You can get 1 day. You can get a bunch of different stuff and different packages for it. So check it out. I think you will like it. And on behalf of the Greasy Meatball and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming. We love to hear from you guys. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.